Hey guys, Jason here for TheChartGuys, taking a look at the TCG ticker requests. These are tickers that members of the community have asked us to take a look at, and that is what we do at TheChartGuys. In addition to teaching you to read charts and apply technical analysis in the way that we understand and apply it, we also do real live analysis of a chart. So if you're trading Snap on the 5-minute and you want to know what we think of it, you can get an unbiased read on it from us and members of the community, and then you get to talk about charts, and who doesn't like doing that? Taking a look at Snap on the weekly time frame, the first thing that jumps out at me is that we are still overbought. We rejected from our 70 psychological RSI test. We dropped all the way down to 30, bounced off 30, and we've slowly been climbing on the RSI, but we've been pretty rapidly climbing on the weekly time frame. We have had brief moments of consolidation, but now we are flirting in oversold and starting to look for signs of weakness. And we're only looking for signs of weakness because we expect a return to the mean being somewhere in the middle of all this price action eventually. That is a theoretical draw that has the price trying to constantly be reaching for something that's in the middle of this. Now, ultimately, what that looks like is going to be consolidation. Sometimes that consolidation can get really moving in the other direction, far beyond what the mean should be, but we always need to be prepared for consolidation. So that is what we will be watching for, the first signs of overall weakness on the weekly time frame. Nothing here says weak yet, but that's what we need to watch for. So we're going to go to the daily time frame and take a look at that action. Overall on the daily, very, very strong trend. Holding EMA 12, holding EMA 26 consistently. What we're going to look for is one of these two behaviors to change. On the RSI, we were overbought. We dipped back into neutral territory. We got a lower high. Well, our price got a higher high, which is bearish divergence. That resulted in a little bit of a downswing, bouncing off of our EMA 26. So now what we're going to look for is a lower high again on the RSI. If that correlates to a lower high in the daily time frame, that's going to be a daily trend change, which is going to signal some healthy consolidation on the daily time frame. So what that would be here would be a lower high. And then the real key moment is, do we set a lower low underneath 2302? If we set a low underneath 2302, that's going to be a daily trend change, and then we're going to look for more consolidation to the downside and follow the RSI as it approaches the 50 area or the mean inside that neutral territory. So all eyes right now are on 2302 on the daily time frame. We're going to expect a test of 2676. If we fail to get that, we're going to look for hourly trend changes signaling overall weakness. And if we break 2676, then simply the weekly time frame is going to keep on doing what it has been doing. So it's all about defining key levels, and in this case 2302 is the must hold level on the daily time frame for us. Now let's go zoom into the 4-hour time frame. Here's that 4-hour low, our high. We get our higher low, break that higher high. Now we're in a 4-hour uptrend, or I should say a very strong hourly uptrend, and we need to establish another 4-hour higher low over 2339. Now the reason we're going to be looking at the 4-hour and making an informed opinion about the hourly time frame is because after we hit this 2339 level, we see a lot of bull move on the 4-hour time frame, all green candlesticks, which means our hourly is going to be overbought. So if we go to the hourly time frame, we allow the TradingView robots to do their thing. There's our RSI value. We are plus 70, minor moments of consolidation. We are still overbought, getting a little bit wedgy on the hourly time frame on our RSI. So we're going to look for is going to be a change of this trend. Same concepts apply. We're looking for a break of 2503. That's the last hourly consolidation. If we break that hourly consolidation and that carries over into a 4-hour higher low, let's imagine it looks like this. If we go back to our daily, that is our daily lower high. Then we are headed toward the 2339 test. So you see how all of these elements play together. It's a lot of moving parts. It is complicated. And we haven't even really added a whole lot of indicators or anything else to that mix yet, have we? So all eyes on the hourly time frame, looking for higher lows over 2503. If we lose 2503, we're going to be looking for 4-hour consolidation, which is going to put us into a collision course with that 2339 level. We lose that, we're looking for more substantial daily consolidation and maybe this weekly time frame to cool off a little bit. Tesla. All right, Tesla is a fun one to do. Let's look at the weekly time frame. Now, what I want to do here, first of all, is look for corollaries in a particular stock's history. Over here, we see a very similar run-up. Let's see if we can get a better read on that on the log chart. So a log chart is going to present things a little bit differently, and it's very useful for long-term trends. Here is that big run-up. Our RSI gets overbought for a long time. Finally consolidates, cools off, and now we're seeing our RSI being overbought again. Now, when we turn the log back off, you can see that this is a much more substantial, much more quickly developed move, especially in the last few weeks, where we're seeing this big breakout over all-time highs. That all-time high here, there. Let's grab that level properly. 968.99. Then we saw a massive drop, slow climb, and now a breakout. So the question is, what is going to happen next? That's what everyone really wants to know, right? Well, we have no idea. All we can do is plan and react. So let's look at the weekly time frame. We know we're overbought. Last time we got this overbought, it took a while, but we did see some consolidation. And the big key was the loss of consecutive higher lows on the weekly time frame. That is the low of each individual candlestick. Save for maybe this guy. So we start here. Every candlestick had a higher low. When that stopped happening, we saw substantial follow through. So now we are going to watch the same thing. Here's our low. Every candle has had a consecutive higher low, and that is a pattern that we want to see change. So right now, our last weekly higher low, or the weekly highest low, 1431. I hope you understand. Once we lose that level, if we lose this on the weekly time frame, that may usher in quite a bit of consolidation. At least it did last time in February 2020. So we need to be cautious on this one. Otherwise, bulls are in absolute dominating control on the weekly time frame. There's no slowing them down. On the daily time frame, we've consolidated well, 1430. Bulls have had multiple, let's see, 1, 2 inside bars, almost 3 inside bars on Friday, low bear volume, and then we see a big break to the upside. So bulls are in absolute control of the weekly and the daily time frame. There's not going to be much slowing them down at this point. 1794.99 is the target. RSI is overbought, but comfortably overbought, meaning we can't put a lot of emphasis on the daily RSI because the bulls have proven that they don't care about that indicator at this time. We're going to look for resistance at 1794, and then we're going to look for weakness on the hourly time frame, because at this point what we're going to expect is a lower high under 1794.99 until we are proven otherwise and this daily uptrend continues. So on the 4-hour time frame, do we have anything that throws that off a little bit? Not too much. Resistance is still the same. Hourly time frame, starting to see some brief after hours consolidation. We have not really consolidated well on the hourly time frame, which means that the bulls can see some weakness tomorrow. We could see the bears dominate the entire day and then have bulls come back and this still be a very, very healthy trend. In fact, that sort of action would be healthier for the bulls in the long term. Ideally, we get more of a concise consolidation pattern, but what that is doing is allowing the market to cool off, adjust to the higher levels on the hourly time frame. It would allow the hourly RSI to resume its trend in neutral territory, and then give the bulls an opportunity for a more sustained upside move to test all-time highs. So no real red flags at this time. Hourly time frame looking for some consolidation. The last real higher low we have was at the very end of that consolidation phase in today's action around the low of 1488. NIO on the weekly time frame, big breakout, a lot of profit taking, and now we are starting our week relatively strong for the bulls with a pretty big day, and we have to ask ourselves, what is going to be the ultimate outcome here? Last time we saw a big breakout was in February 2019. We saw some profit taking after a double top, and we had a lot of downside action. This is a pretty significant move and far more powerful in both by volume and price action. And then the question is, ultimately, what happens here? And what happens when we fall into the zone where there is no real recent support? So the weekly time frame, relatively indecisive and choppy, doesn't give us a lot of information to work with. On the daily time frame, however, we start to get a little bit more information. And what I'm primarily interested in at this time, where'd that little guy go? What I'm interested in, of course, I've got the wrong one set. Okay, here we go. Can we hold this level? 1052. Now what this is the daily support level. So we saw our breakout, we saw the battle between the bulls and bears. Ultimately, the bears won in the short term, drove the price down all the way to 1046. That was the most extreme point that the bears were able to push the price on the daily chart before bulls have reacted. So based on this distance, what we're going to expect now is not a straight shot back up to 1644. What we're going to look for is a lower high under that level because of the amount of effort that was exchanged in both the up direction and the down direction. It's unlikely that the bulls will be able to keep this same pace that we saw here here and resume new all-time highs. The more likely outcome is that the bulls will see some consolidation after a couple of green days, perhaps some weakness, and perhaps we develop into an equilibrium. So if you're looking for a exit on your position, what you're going to look for is an hourly trend change up in the area of, let's say, $15 psychological. It seems like a nice happy little target. And then looking for weakness to carry over into daily consolidation, after which point we would look for a test of 1046. So again, a lot of moving parts, a lot of things happening. On the 4-hour time frame, the bears are still in control of this chart. 1339 is the must break level for the bulls to consider this to be a changed trend. What we have is our high, we have our low, lower high, lower low, lower high, lower low, lower high, and ultimately this is pretty much what we expect to see. Now, that is going to be the expectation until the bulls can change course, and they change course by breaking 1339. If we see weakness tomorrow, we see a sell-off, we would expect a lower low under 1046. If bulls can maintain this control and the hourly bulls can fight off any attempt by the bears to reverse course, then we are in the position to change the 4-hour trend, and then things start to get interesting for the long play. Hourly time frame, nice low. Nice sideways consolidation, established a nice base of support pre-market. Bulls in control for most of the day, almost overextended, and they certainly would be overextended by the time we reach 1339 if we did that right now. So that would be a concern for the bulls. If we see an open at this level and the price hits 1339, is overbought, and we see a rejection, then we're going to be looking for a higher low over 1046. If we see a straight drop and no attempt by the bulls to break that 1339, that's going to add a little bit more credit to the idea that we're going to expect lower lows in the 4-hour time frame. So planning for both scenarios, reacting to whatever the market gives us. FMCI on the weekly time frame, doing its absolute best to try and find a higher low on the weekly. So far hasn't done it. We haven't done that because we only have 1 day of action. This is this little blip. That's today's trading action representing a weekly candlestick. So when we're looking at the weekly time frame, or really any time frame, this is not going to be considered a weekly candlestick until at least tomorrow. Right now, this is just a daily candlestick on a weekly chart, because if we go to the daily chart, it's the exact same candlestick, just mushed together with all this other data. But what it does tell us, if we're able to hold 1338, is that when you have a weekly higher low, if we hold this weekly higher low, then we're going to be looking for another test of 2005. And the reason we're going to be doing that is because if we have established a weekly higher low and we've consolidated properly and we've allowed our RSI to cool off and resume the neutral territory, but bulls are still interested in long-term positions, they will slowly drive the price back up to that area, having successfully consolidated. So what we're going to do is look at the daily time frame, and right now we're in a weekly uptrend. We're looking for a daily counter trend, and we see that here, which is giving us that weekly consolidation, so weekly lower highs and lower lows. We need to change this daily trend so that we can start resuming a new daily uptrend, which of course is going to be in conjunction with that weekly uptrend. That's what we want to see. Do we have a daily trend change quite yet? No, we don't. At least we would need to breach 1709 in order to change that daily trend. Let's adjust that. I keep forgetting the Magnus aren't on. 1699, call it 17 psychological. We need to break 17 psychological at this point to change the daily trend. It's unlikely we're going to see that continue and break 17 psychological. That would open up a very wide range for us to need to consolidate against. What I would like to see would be a lower high underneath that, a higher low over 1338, and then a nice break of this high, whatever that might be. That would be more of an extended play. We'd have to keep our eye on FMCI for a little bit longer, but that would be the best, most sustainable long-term trend. Now let's talk about what we have in play right now. If we're looking for a lower high under 17 psychological, and we're going to go to the 4-hour time frame to see if that trend has changed, it has ever so slightly changed, but hasn't consolidated to form a higher low. So what that means is we've got our high here, our lower high, our lower high. Now we've broken that lower high level right here, but we haven't established a new higher low over top of what the critical one right now is 1356. So we're looking for a hold of 1449. Should that break, we're looking for a higher low over 1356. If that holds, then we will look for another high test or consolidate inside this range, because this is quite a bit for us. We have a long upward and lower wick showing that volatility, an inside bar on the 4-hour time frame, possible inside bar here. If we see an inside bar break either this candlestick becomes one or the previous low, then we're going to be looking for that higher low over 1356. So quite a bit at play here. Weekly time frame is good. Daily time frame has got that healthy consolidation to the downside. We haven't changed the daily trend yet, and we haven't changed the 4-hour with a higher low. So if you're looking for the most secure, highest conservative, what's the word I'm looking for? If you want to just the conservative entry, that's the word I'm looking for. The conservative entry on this long would be a higher low over 1356 with the expectation of a daily trend change and higher low into higher highs for 17 psychological test. Yes. CRWD. Last one we're going to do today. CRWD on the weekly time frame was overbought, big red candlestick. So now we are seeing probably oversold bounce. And I say that again because this green candlestick is simply today's action. Last week overall was red. If we got into red territory very, very quickly and we had an oversold bounce, then that may be all of what this candlestick is. We've seen some higher lows lost. We saw some brief consolidation. Now we got a weekly support level that we can play with. 98.84, probably not the right level. Let's adjust that a little bit. 98.61. So let's go figure out what this big red candlestick was about and why we rejected, and determine, is this a bounce or is this a counter trend? A counter trend would be more useful. A bounce is a short-term play. Daily time frame. Here's that big red action. Here's our plus 70 overbought inside bar bear break, big volume dump, bounce, basis support established. Pretty good basis support right around that 98.61 level. That's going to change a little bit as we look at the 4-hour time frame, but right now what we're going to expect is going to be a test of 118.56. The range here that we see is a little bit different than what we've seen historically, so that adds to the idea that we would expect a lower high under 118.58. Daily time frame is looking okay though. Once we get that 118.58, we may look for a short position if we see that weakness with the anticipation of a head and shoulders tight pattern. That's not head and shoulders quite yet, nor may not become one, but what we're going to look for is a lower high because of that range. What happens after that is anybody's guess. We'll have to react to the chart as it develops. But inside bar, almost inside bar actually, bull break, looking for a lower high under 118.58. Let's see how this changes in the 4-hour time frame. Not a ton of change, but we are seeing some resistance right away here at 106.98. That seems to be the key level for us to get over top of. And this is the perfect spot for the bulls to change course, allow for some consolidation to take place after all of the overbought action that we're going to see here in the short-term time frame. In fact, let's just go look at that right now. Let's go look at that right now. So 5-minute time frame, overbought. We hit that 106.98 level. We double topped it, triple topped it. And the reason that is an important level is because way over here, it was a important after hours level. And with the bulls already overextended multiple times in the 5-minute time frame, once they start losing these 5-minute higher lows against the area of resistance, we should expect them to see some hesitation as they approach that level for 2 reasons. One, like I said, they're already overbought. They put a lot of effort into this climb, and this is a historical resistance point. And 2, we lose the 5-minute trend. We see a little bit of hesitation here. Bulls or bears tried to do something, couldn't really manifest it, and now we are triple topping against 106.98. Best case scenario for the bulls would be for a bear break and then looking for an hourly higher low into a 106.98 break. If they're able to do that, then they're going to be changing the 4-hour trend, having established a higher low on the 4-hour, and then breaking that 106.98 for a conclusive 4-hour trend change as well. That would get them in a good position to test at 118.58, but we'd still be looking for a lower high at that point. 15-minute time frame, nice and consolidating, pretty healthy so far. So tomorrow's action, if we open in this area, we need to hold 105.32. If we fail to do that, we're going to be looking for more substantial hourly consolidation, but really it's all about 106.98. Anyway, I think that was a long enough video. Again, if you're interested in learning more about technical analysis, check out TheChartGuys.com. We do a lot of, we do analysis live every Monday, every weekday actually, but what we do is TA Q&A Wednesdays and Mondays, and that is an opportunity for you to come in and ask questions. If you have any questions about charts, we have answers for you. And if we don't have the answers, we will certainly do the research and figure it out together. Anyway, that's it for today. Check out ChartGuys.com. If you have any questions, please leave them in the comments and I will answer them.